Okay, hopefully that's all working, mate. And very, very good morning, everyone. Welcome once again to a brand new week of trading, UK Open style with Jeff and Ash. My name's Jeff, and I'm joined by Ash. Hi, Ash.
Good day, buddy. How are you doing?
Looking forward to the week, frankly. It was a bit of a struggle last week, and wouldn't mind getting some cash in the bank just to make it all feel good again, I think.
Yeah, it's been a tough start to the year, isn't it? You know what? I agree with you. I had I eventually decided to go with the market last week and take on a long. But the area that I got in was still a sell, and I think that was on. It might have been on a Thursday, but on Friday I woke up to the news that the Chinese GDP data was coming in at 6%, which was around about expectation and not showing any weakness. We also had some pretty poor numbers out of the UK, which boosted the potential for an interest rate cut. So I decided to go long again, and finally the market has taken off in my favour. So
cool.
I actually do have a positive trade on right now, and I'm going to ride it. I am looking at some potential weakness today. Which we can look at. Actually, we can look at now because I do think there's a potential trade. I don't know if you want to put that pound trade on. Do you? You need to get that on?
Have a look, mate. I'll set it up, and we'll come back to me.
Okay. So if you could share, let me share.
I'll see you later.
Okay, mate. See you shortly. Okay, so we've got a short on, but it's a bit of a scalper short, really. Short in this area, just maybe down to the daily pivot, definitely down to this particular line here. So you'll be looking at around about 76.76, I think, for profit taking, which is only going to be, oh gosh, actually you may not have enough room. May not have enough room to take that trade, but it could be daily pivot, it could be weekly pivot. It could even be down to the trend line, but that would probably indicate a bit of a collapse in the FTSE. So I'm not really anticipating that, but I do anticipate a bit of a drift today, and maybe we get caught in a range, and I'm interested to see where that range is. But testing this area where it broke out from, I think would be likely isn't necessarily the word, but I think that would be natural. It'd be a natural test of an area. But this market is pretty strong, and looking for just a bit of a dip, a 10 pip dip in the morning. Would probably be my first preference. That'd be much more preferential. I do anticipate this market going quite a lot higher. Maybe not from this particular zone or this particular spot, but there's a trend line here. There's quite a lot now. You can see actually the daily pivot is looking like a really attractive take profit zone, or we can look for a dip into this area to go long, because as I say, I think this market is fairly fresh now. I think it's a decent market now for some upside. We do have some news and data out from the UK tomorrow, which is going to be, I think, probably intently watched as we get further indication of whether the Bank of England will be lowering interest rates, and that will potentially allow the FTSE to surge forward. I am looking for a dip in the pound as well. I think the pound is probably going to take a little bit of a kicking over the next few weeks, and if the Bank of England, obviously, if they lower interest rates, then I think that kick-in may well last, maybe a little bit longer, and possibly into next month. Right, let's see what happens.
When's that, mate? So, when's the meeting?
Let's have a quick look. In fact, have you got anything pending you need to deal with?
I've got to place this trade, so I'll do that if you like.
Yeah, let's do that. Let's get down to business first. So we're looking for a short here, but just into around about the daily pivot area, and then we're looking for a long. So play that any way you like. You could go in a light short to go long. Not the best price, to be fair, or probably a lot better and safer. Just to wait for this daily pivot to be tested, which I suspect it probably will do. We got a US bank holiday today, as far as I'm aware. We got a few issues over in the Middle East, again with Libya blocking some oil exports, and Iran. There are some issues in Iran as well. So I am looking for a bit of a drift to the downside here. But ultimately, I think we should definitely be long and strong with this market. So maybe not the wisest thing to play the shorts with a strong market, but it's going to come down to the pound. But let's put that pound trade on and see where that's what kind of information that gives us for what might happen with the pound today.
Right, mate. Throw her across.
Okay, here it comes.
I'm actually seeing a short-term buy on the pound.
Yeah, I know what you mean. I know what you mean.
I'll go through that in a tick, but let's place this first. Right there and there. Okay, I'll explain to you why that is the case, and it's got to do with the double bottom here, higher low taken out. There'll be some liquidity here, I think. We'll see. Okay, so the order is going to be 5 pips below this one. And remember,
just incidentally, there's also a trend line with a pound as well, which we could look at later.
Here?
On a daily chart, which looks like it started, on the 11th of August.
Right, entry short is 1.2968. 1.2968. And remember, it is Monday, so we're only trading at half risk. So half a lot on this one. It is a sell stop. Oh, sorry. The first one we'll do is a sell stop because we're closer to there than anywhere else. Did I say 6.8? I think I did. I did. 1.2968. The stop loss. 10 above there, which will be 1.3011. And that's all we need to do there. So remember that 30112968.
3011, yep.
30112968. This one will be. What if I did that? No, I think it just places the order. Okay, so this one's a buy stop. $3011. And 2968. My goodness, I've got a memory like an elephant. I remind the elephants, Ash. Did you know
that? Love it.
Okay, there we go. So entry long is at 1.3011, and that's in a far better position than most that we've been having lately. The short I hate again. I always hate these shorts when we're going in the downtrend, obviously. And that is at 1.2968, trading this at half of 1% because it is Monday and 6 out of 7 or 5 out of 6 have lost. I can't remember. We'll go through that a little bit later. The reason I've got a little bit of a bullish, and it's only short term, I stress that I'm not in any way, shape or form a committed bull. But it was just like last week, really, where I said that despite the fact that we're in strong momentum to the downside, we are at a very strong level here, and we're still there. In fact, we're back at that exact level where where price action is right now. So I guess it's another attempt here, but it could also be another rejection. So this is a key level for me, 1.75 or something like that. So I think if that holds as support again, I think we've got some more short-term upside. Now that's probably not going to go too far, and if we put this, maybe the trend line Ash is talking about, I'm not sure.
No, actually, from is it November? The low. I'm actually looking at the low.
The lows, yeah. From here or here?
Yeah, that one. One back.
One back. It's probably going to do the same thing.
Yeah, around there. I mean, it does suggest that that's a fairly strong level of support, doesn't it?
It does indeed, and you've got a nice confluence there as well. So
yes,
horizontal level, yeah, support trend line. So there is reason to think that now is not the best time to go short. Maybe let that break and come back and retest that area. Might be a far better way to do that, or far safer way to do that. Am I committed to it? No, I'm not committed to anything right now, except maybe I can see the potential for a short-term rally, and that's likely to go, in my opinion, to the next confluence level, which is, I guess, early doors, as you say, Ash. Maybe in that vicinity. Let's call it 130.25 ish. So 50 pips they're available, I think. But geez,
I think it's an interesting one, isn't it? Because the thing is, when it comes down to the pound, there's no doubt that that some of the signals, fundamentally have been for some weakness. But just as anything, it comes down to timing. It doesn't mean that all of a sudden today it's going to absolutely start tanking to the downside. And I think there's probably a case to be made for waiting for that average earnings data tomorrow. To see what that comes in at, and I think we do. Let's have a look, because we do have a the rates decision is due fairly soon. Let's have a look when that could be.
Oh, mate, let's go back to you and we'll have a look at that.
Great. Okay.
Then I'll have a look at Friday's pound trade. Of course, I'm not at Friday trade. I'm going to have to turn into one. I can see that.
Oh, do you know what?
Because
Friday,
there were some good moves on Friday. Wow.
Oh, it's brilliant. I had a great day Friday in the end. I have to say it was superb for me. Yeah. If you give me the screen.
There you go.
Yeah, I got in here on Friday, right on the pivot.
Nice.
It was brilliant, and I'm holding on to it because I just I'd like to see if it's got a little bit further. And I I'm not encouraging anybody to do anything specific, but if I wasn't in a trade already, then I'd be looking to buy up here again. We've got Martin Luther King Day in the States, and I think that it will probably be fairly muted session today, which will probably give people plenty of chance to get in. And the pound looks like it's holding firm at this particular stage. So no massive suggestion that we're just going to fly to the upside just yet. But I think this market's got further to run. When I look at it on the longer term timeframes, and the fact that the FTSE is a bit of a laggard when it comes down to global stocks, it could well get back to this closing high, but ultimately back to this high and beyond. A lot of the other markets have been making all-time records where the FTSE's been incredibly muted, mainly off the back of Brexit, no doubt about it. So it's got quite a bit of catch up to do, and maybe we get to some normality. We're going to get a few twists and turns on the way still with the Brexit scenario, and it wouldn't surprise me at all to continue to see some a few kind of trepidous moves in the stock market. But I think we may well get back to just a little bit more normality and clarity. Now let's have a look at what could be driving the global markets right now. We've got a Dow Jones Industrials, which is just a little bit softer. The futures, the S&P futures, just a little bit softer as we head into Martin Luther King Day here. So maybe just a little bit of speculation on some profit taking in the futures market. We also have under the daily pivot, so there could be a little bit of a drift to the downside. So that would suggest maybe some weakness with the FTSE possibly. The Dow Jones is exactly the same. And when we kind of look at this on some longer term time frames, it's had a huge boost to the upside. Maybe it comes back down to the weekly pivot before it picks up again. And it needs to. When we look at these indicators here, they are all overbought. And you can see, overbought and it starts to drift down. Overbought here, it drifts down. The embedded, but eventually, it was embedded here, but it really kind of went sideways before drifting down. So these overbought signals, that one wasn't so good. That one wasn't so good. Little bit of a dip there, a couple of bars dip there. So there's certainly a decent chance that we get at least a bar or two of downside on the Dow Jones Industrials. Checking out on the COT reports and the COT data as well. There is maybe just a little bit less selling kind of going on. We can bring that up later on, but I think it seems like the commercials and the non-commercials seem to be fairly positive with the US stock market, which is a bit of an odd situation, I think, but both of them seem to be fairly keen. But let's look at the pound, because the pound is going to be, in my opinion, a big driver for the FTSE in the coming months, which is why I'm quite bullish on the FTSE. And as I say, I think with all these other markets making all-time highs and the FTSE lagging a little bit, I think it's due a decent flurry to the upside, and it will probably come from the Bank of England's rate decision. If that happens, and it is actually an interest rate cut, that will very, very likely help boost some of the UK stocks. As Jeff said, this is on an area of support, so you would be looking for a long here, but that would be a normal scenario. Don't get me wrong. This is not by any stretch a short, but it's when we kind of look at this on longer term timeframes. And I was bringing this up in the show. I think we should be really keen on selling the rips in pound crosses, because you look at this pound dollar. Look at that bar, huge bearish engulfing bar on the pound dollar, and realistically, you only have to go down the list. This is pound Sing, a bearish engulfing bar on pound Sing. This is Friday. I'm pointing out. A reversal bar, maybe a high test if you like, or I wouldn't really call it a shooting star, but looks like a high test on the pound Kiwi. So Friday again, some weakness there after those retail sales number. Near enough an engulfing bar on the pound yen. Same with the pound Aussie and the pound CAD. Another engulfing bar to the downside. Let's show you the euro as well. Where's the euro pound? Where are you? Here we go. Euro pound. Euro pound. A hint of some upside. Who knows where this inverted head and shoulders ends? It could be, when I look at this, it could be. Just get rid of that a minute. If that's where it is there, then maybe it started here. It's possible. If we include this as well, then it could be that that's got to go on just a little while longer to give us just a bit more confidence that the pattern is fairly equal. So I'd be looking for some potential strength in the euro against the pound. I'll be looking for strength against the pound really across the board, and let's get to the reason why. Let's have a look. So firstly, let's look back before we look forward here. So this was really very, very good for the stock market's perspective. Decent GDP numbers from China, but this is the real number for a boost in the FTSE 100. Minus 0.6% retail sales, really suggesting that the consumer in the UK is in a little bit of trouble. It doesn't really feel with much confidence that the UK consumer is in particularly good shape here.
What's that chart look like, mate?
Yeah, let's have a look at that.
Oh, geez.
Yeah, and it's not great, is it? Because when we sort of consider this area, because this is 2019, and aside from a couple of dips down here, generally speaking, it was pretty good. Those retail sales numbers were pretty good. Suggesting that that if anything, the UK consumer might even be able to handle a rate hike. Rather than a cut in interest rates. So
this might be just a guess, but I'm guessing all of these changes, like going from positive to negative, are perhaps seasonal.
Yeah, well, that's a really good point, actually, mate. But retail sales, the January. Let's have a look. So January's retail sales,
as retail sales tend to be, of course.
Yes.
Christmas, Easter, all those sorts of things
Yes.
come into it. But
Yes.
they rarely get this right, don't they? The forecasters are way off all the time.
Yeah, it's really, you're right, actually, because actually looking at these January, mind you, though, 2014 was a huge, massive gain to the upside. 2015 was positive. 2016 was a negative. So I think it can be a little bit from looking at this. That's a huge negative. 2017 looks a little bit touch and go, to be honest. But I would have thought the January numbers should reflect what happened in December. That should reflect
You would
Christmas
think
sales.
so. Yes.
Yeah, so you'd think that should be one of the better numbers, but the prior number was at 0.8%, minus 0.8%, and then in fact maybe that's the most significant fact, because when we look at some of these, very few times is there two in a row.
Double hit, yeah.
Double hit, and yeah, we get the double hit there.
You can count them easily. Just go back there for a sec, Ash.
Yeah,
I think you're talking 3 times in 10 years or 8 years or something. 1, 2, 3, 4, 5, actually. 5 in 8 years. Out of, what are these, quarterly?
These
or monthly?
are, yes, these are monthly retail sales. Yeah, monthly.
So 5 in 8 years, 5 out of 40. Wow. That's rare.
Yeah.
Eh?
Yeah. Yeah, 5 out of 40. Yeah, so rarely do
So
those
87.5%. They change every time.
Yes.
Wow. Oh, sorry, that's not true. I'm only counting the negatives. I mean, counting the negatives.
Hold on 1 second. I'm just going to quickly knock you the screen, mate. 1 second.
Yep. What I'm saying may not be relevant, of course. It's just something I'm noticing.
It's not going to get there, is it? So
do you want me to take it for a bit, mate?
Yeah, just take it for a little while.
Yeah, no worries. All right, let's go beyond the pound for a second. Well, actually, let's look at Friday's pound trade, which would have been entered here. Hang on, I'll get rid of this. Doesn't belong there. There we go. All right, so there's the bar. Sorry, there's the bar.
All right, I'm all good, mate. I'm all good.
Okay, mate. I'll just do this quickly and come back to you.
Yeah.
So there's the actually that's the 8. Why is it? No, that's right. That's the 9 o'clock bar. That one. So that's where we enter 10 pips above here, which is this line here at 1.3099, pretty much 1.31. And that got triggered, obviously. Let's go to the 15-minute and see where. So triggered here on this bar. So at that point, you start trailing on a 15-minute chart, which is what we're on. Stop loss moves to here, which is, let me get that level, 1.3101, let's call it. And our entry was what? Hang on, that's the high, sorry. I'm looking for the low of that bar. 1.3087 versus what? 1.3099. So that's a negative again of 12 pips. 12 pips out of a risk would have been 10 above there, 3110 and 3083. So 27 pips. How many pips did I say, Ash? 11, was it?
Sorry, man. I'm just looking at this. Because I got my long in the market. I'm just trying to manage my
you do what you need to do.
I'm done, mate. I'm done. I was literally just sort of like looking just to make sure that I've taken the right course of action, which
1.3011 was our entry long. Our trailing stop went to 1.3087. So that's 23 pips. No, I'm doing this all wrong. What a goose.
This is from Friday. No, sorry. Yeah, this is Friday, isn't it?
Yep, 1.3087. No, that's right. So that's the low of that bar. That is, I'm on a 15-minute chart. Get real. I'm writing this down, Nash, so I don't have to remember it, which is good.
Very wise.
1.3069 was the stop loss. So that's 41 pips, and I think it was 12. 41 pips with the risk. And the stop loss would have been hit at 1.3087, making that 23 pips. Entry was 30.10. Yep, that's right, 23 pips out of, did I say 47? 31, 41. That's got it, I think, 23 over 41, which is a loss of more than 0.5%. Let me go here. 23 divided by 41 equals 0.56. So 0.56 is our loss. I won't hang around and do that now. I will continue the spreadsheet. We don't have to do that every day, but I'll put that onto the spreadsheet. Another loss. So that's every day last week. What a shocker.
Well, that it lost.
Yep, every single day.
Interesting,
but not great. Not awesome.
No, not great. But I wonder what the what so far. What do we know? Is there any lesson to be garnered from that, or is that just it needs longer to develop? Is it just one of those things that this is it's a purely statistical strategy? So statistically.
Yeah, it's got nothing to do with hindsight or brilliance or anything like that. I didn't put Thursday in. I'll have to update that, guys. I don't want to do it and make it inaccurate, and I'm being inaccurate here, so I'm just using my head instead of my calculator. So I'll fix that for tomorrow. Sorry, it's Monday, and I just don't get into gear too well on Mondays. But yeah, 5 losses in a row. That's we've had one of those before, but like I said, if you can maintain a very small loss when you're losing, then it's not as disastrous as it may seem. If we now have 4 winners in a row, that's going to make the 5 losers look pretty silly at the end of the day. But the fact is, we have had 5 losers, so it's not a great thing, I've got to say. There's no sugarcoating that. That's not a good thing at all. Do we need to go back to you, or should I just have a quick squeeze?
Let's do that, because we were just talking about the pound and subsequently the FTSE because of the pound. So let's finish that, and then we'll get on to something else.
Right, happy days. I'll see if I can throw it back to you without disappearing. There you go.
No, the FTSE is in a buy zone now. This is a daily pivot. Looks pretty good to me. I like this for long. As I say, if I was not long already, then I'd be getting in here. Nice area of confluence here. Might even dip down to the trend line, which would be of benefit in many respects, because if it dips down to the trend line, then you might even get something of a reversal bar. Actually, is this tighter than I thought? It might be tighter than I thought here. There we go. It's right on top. So great area for a buy. And obviously, if things start to break down, then there's probably enough time to get out of this. But I like that. Really good buy zone on the FTSE 100. So there is that opportunity. If anybody wants to hop on board long, then you'll be with me here, and this is a decent place to try and get in. I think you'd have fairly nice tight stops, and you're not really you won't just be aiming for. You could even put a stop under the weekly pivot, and then if price breaks down here, close it up. But you're not looking for this high. You're looking for one that really the next level up, which may well be up here. So there could be there might even be 60 pips to the upside. So you could certainly risk 20 and with the idea that if it closes below the pivot, then you'd be taking it off, which might only be a 10 pip trade in the end, 10 pip loss in the end. So decent place to go long on the FTSE. Now let's have a look then. So we had last week. Oh, we don't want that, do we? That's my other one. So last week we had this. Oops. I can't control these screens today. Last week we had this. So we had the retail sales from the UK. As we know, and going further back again, it really started here. This was the really key, the key announcement here. So if we go to this this announcement of the MPC member, let's see if we can get. Let's see if we can get that. What day was that? It was the 16th. Hold on. Let me just see if I can find it because. Right, I voted for lower interest rates at the most recent two MPC meetings in November and December. In this speech, I want to discuss the factors behind those votes. I will start by reviewing recent economic data and then discuss the risks to the outlook and finish with some comments on monetary policy. You know, we don't really need to kind of like go on and read a whole bunch of this, but the most important takeaway here is this part. I voted for lower interest rates at the recent two MPC meetings in November and December. So nothing looks so then after that, you know, we could go back and have a look. First, softer global growth and higher Brexit uncertainty. The UK economy has remained sluggish. The slowdown has created a modest output gap. And there are signs the labour market is turning second. So this is turning second. The most likely outlook is further period of subdued growth. So really, the labour market is really important. There are signs that the labour market is turning, and second, there is the most likely outlook is a further period of subdued growth. So you could read the full story on that if you want to get a bit more of a feel of it. But if we just take those few comments. And utilize them, and then have a look at the data after that. Then really, you know, the retail sales coming out. So already we had an important MPC member voting for an interest rate cut. Then we had a retail sales number which was pretty poor. From the UK. So it's not really showing that the consumer is in great shape. No, I don't know how far we've got back here. So remember, we had CPI data coming in weaker than expected. So, you know, the price points aren't getting overblown. So we've got weaker than expected CPI data, more significantly than what was expected. It was actually lower than previous. So that in itself would encourage an interest rate cut if you were just taking the, just absolutely binary information. And the binary information is that when the interest rates are inflation rates are coming down, then a cut is more likely. So you've got the members suggesting that there could be a cut, and then you've got pretty weak looking numbers from the inflation data, and then we have the consumers. The information on the consumer, and the consumer didn't really hold up very well. So. I've gone too far forward. I probably don't need to go back again, but you know, we just looked at those retail sales numbers, and those retail sales numbers were pretty atrocious. You know, again coming in weak, minus 0.6. So we have, you know, the potential for a weaker consumer. We have the potential for the Bank of England, a Bank of England member suggesting that they are pretty comfortable looking at an interest rate cut, and we also have some pretty poor CPI data. So there's lots to suggest that that we should probably be looking for the Bank of England to be cutting those interest rates. Now, let's just have a look at when that that meeting is, because this is what people are going to be trading in and towards. In fact, before we do that, so tomorrow we have average earnings, the average earnings index. This is also going to give us an indication of how solid the consumer is. If this continues to weaken, the forecast is for a little bit of weakness here. But if this does weaken, and it has been just coming off a little bit, so I guess this is what he's talking about. You know, some of the data has just been a little bit softer. If this continues to be a little bit softer, then that's maybe further suggestion. A huge number to the downside is going to be a massive indication that that those interest rate cuts will be certainly speculated upon. We do also have an unemployment rate as well, and the claimant count, both yellow folders, because they're probably unemployment rates for workforce employment last 3 months, but maybe not a hugely significant number unless it's an absolute stinker. So we'll look for that. Public sector net borrowing. I'm pretty sure this has been coming down anyway. A little bit of a dip in the net borrowing, but that's not a hugely significant data point for us to follow, except for the fact that we don't want those borrowing costs to be too high. What else then? So we got nothing else. Flash PMIs on Friday, more data which is going to be looked out for, which is kind of suggesting that the pound may well be on hold for a little while. You know, it's certainly showing some signs of stress and weakness, but the pound may well be on hold until we get a little bit closer to this rate decision. So then we go into the following week, and the 30th of January, we have the monetary policy decision on the 30th of January. So a Thursday week it is, mate. We have
Cool.
we have the rates decision. So we got a few data points to watch out for before then. But I suspect if those data points come in, fairly badly, then the sell-off in the pound will probably begin. And to my mind, as I say, selling the rips is a great idea for traders. I would suggest. So it's really kind of picking your point, but trying to get a high enough price that would give you some cushion into that rate decision and into some of those data points as well. So with some data points due, I would have probably plumped for a little pop here. But I think as the closer we get to those data points, I think it's much more likely that we do get that drop.
Okay, happy days. It's pretty clear what you're looking for. I don't know if it's so clear of what I'm looking for, but are you ready for me to take a look around?
Yes, mate. Yeah, let's do that.
Okay. I'm going to start with the dollar index. And the reason I'm going to start, well, that's not the dollar index. That's actually Euro Aussie. Where's the dollar index going? I had it up. There it is. Can you see the dollar index?
Sure we can see the Euro Aussie at the minute.
Right. Let me see if that changes. I'll have to do a new share, I think. And I can put my other broker up here. There, I think. That should give you the dollar index. And whilst I was pretty confident yesterday when I was having a look at this, I thought, this is on its way up. I'm not that convinced. I'm on a monthly chart, so trying to get a big picture view of this. And the real thing that I see here, the most prevalent thing that I see here is this level. Let me just make that a little clearer. And the reason I see that very clearly is because we seem to have come off a bottom before, and we found our way back to that level and rejected it. The tricky part becomes, what level are we now at? Is it the bottom of this ascending channel, Have we come off there and are we headed back to the top? That's kind of where I'm at. But where's the obvious level here? I don't really see that obvious level. It's not standing out to me in any way, shape, or form. There's definitely a level there. There's no question. And we haven't retested that. So that's where I've got a little bit of concern about this. I'm seeing here, because we do have a reasonable confluence in that area. It's not superb, but it's reasonable. It has been support on quite a few occasions. Resistance on quite a few occasions. You can't really say that in terms of support, but I think we can find our way back here. And that's leading me to think that there's perhaps some dollar strength around the place. And there is a bit of commentary around that particular point as well, I understand. That's not going to make it go there, of course. So don't be enticed into thinking that the commentary is right. It's very much a case of where's the levels, where are the levels, where's the structure of this chart. And I continue to see higher highs here, but this big lower low here is very interesting as well. So I can see a case for either way. Come and retest this, or go and retest that. I think we're pretty much midstream. The fact that we've come off a support level, and the support level being the bottom of that channel, in my humble opinion anyway, probably tends me to suggest that we're going here next, which is some, what, 300, 250 odd pips away. So there should be some upside here, in my humble opinion. That leads me back to where Ash was, and he's saying short pound. I'm saying strong dollar, which means short pound, euro, Aussie, Kiwi, CAD, all the above. So to my mind, it may even be a little bit of a race to the bottom. So let's go and have a look at that with that in mind, or have a look at the charts with that in mind. Where do we find relative strength? And it's not in the pound. It's definitely not in the pound. We've seen that. We've seen the charts, and I don't need to go there a second time. Is it in the Aussie? So let's have a look at Aussie dollar, and can we draw any conclusions from that? Well, the only conclusion I can draw from that is we've broken the recent range to the downside, and we've retested that to the downside, and we potentially look like going back to here. So I don't see any strength in the Aussie. Add to that we've had massive destruction in this country in the last 2-3 months with bushfires. We're now due to have floods. There's flooding in Queensland as I speak. And there's going to be a heck of a time of rebuilding all this infrastructure that's been destroyed, livestock that's been destroyed, wildlife that's been destroyed, buildings that's been destroyed, unprecedented. There's something in the vicinity of 2,000 homes being burned. That's never happened before, ever, because people just don't build that close to bushfire zones, I suppose, or amongst bushfire zones, and that's been a changing trend over the last goodness knows how many decades, where people are willing to build inside forest zones and take the risk. Well,
that wasn't done before, was it?
Well, it was, but not in so many numbers. As people tend to flee suburbia and try and grab a greener lifestyle, they're tending to get into these forest areas. And that's not such a great idea when, the whole of the countryside's on fire, because it's look, we've always had bushfires. We've always had wildfires in the States. They call them wildfires. Nature does that. It takes care of itself. It has to regenerate, and it has to burn out old growth and all the rest of it. When man comes and impinges on those areas, then you're going to suffer obvious consequences. But this is unprecedented. We've never had this, as far as I'm aware, and history I think is saying that insurance companies must be biting down on their lips and all the rest of it. But this is going to take a massive regrowth period And I think the major concern for me is not so much that growth won't promote stimulus in terms of local economy, in other words, GDP. I think that'll tick along quite nicely, if not see an uptrend in GDP, because of the rebuilding. It's going to be a massive re-infrastructure, and the insurance companies, by and large, will pay for that. So that, to me, is positive, but it's not necessarily positive for the dollar, or the Aussie dollar rather, because nothing is being bought from overseas. We're only recirculating our own Aussie dollar within the country. So there's no new demand for Aussie dollars, if you like. And when I think about the livestock that's been lost, the incredible drought that we've been in for such a long time now, livestock numbers are down dramatically, really, really down dramatically. And, we've got big exports in wool. We've got big exports in beef. We've got big exports in a lot of livestock cases. Pork, it's massive to China, particularly since we've had the pork situation in China. So, the resources that we did have, say 3-4 months ago, from a non-mineral sector, will definitely be way, way reduced on an export basis, and therefore the demand for Aussie dollars should drop, in my humble opinion. The only thing I believe that can hold the Aussie up is if commodity prices, and I'm talking minerals, copper, tin, iron ore, coal, those sorts of things, if they were actually to rally, and I can't see any reason why they would currently, then maybe the Aussie's got a case for holding on. But apart from that, I think it's in dire, dire straits. And we're not seeing that directly in the markets. Yes, we've come off the highs, but we're still holding on here for some reason, and I'm not sure why. But when I look at this market structure, I see potential for, let's call it a head and shoulders, shall we? Go away. I hate it when I'm infiltrated by all these things.
What's that?
Oh, all these little pop-ups that come up on my screen. I don't know if you can even see them, but just annoys the bejesus out of me. And we're also, sorry, I'm not sharing the Aussie chart, guys. I forget on this this program that we have to change our screens every time, rather than you're watching my screen. You have to pick which screen I'm actually looking at, which is a bit difficult. When you've got multiple screens all over the place. So when I look at this, maybe a daily chart's a bit clearer. I'm not sure. It's really not, actually, is it? But you can see that there's a standout, in my opinion. It's a massive head, there's no doubt. But there's clear shoulders here, in my humble opinion. They're only spikes, so that they haven't been really built up. But then if you go back to the 4-hour chart, you see that if that's the shoulder, then that has been broken. Now, even if you don't consider that to be head and shoulders, I don't care. It really doesn't matter. At the end of the day, this is a lower high based on a potential reversal here. And this is what I call a clear out high, where we've come back to that level. We've taken out every single piece of liquidity that's available at that point. Maybe even that there might have been a little bit more above here, which is something that concerns me a little with the theory that I'm just about to say. But that's a bit of a clear out as far as I'm concerned. And I do expect downside as a result of that. We're now in a situation where we've come not back to this level, but this level becomes crucial now, because if you do consider that to be a reversal pattern, then this surely is the neckline of that pattern. And therefore, if that goes and we go back to a bigger time frame, we'll start with the daily. If that level goes, suddenly we're back to here, potential back to here, potential back to here. So there's really is a strong potential for this. And if I go to the bigger time frame again, where we've seen since 2018, January of 2018. I remember it well. I think it was the 26th. It was Australia Day when this happened. And this has been the flavour of, well, let's call it the last 2 years anyway. And what I now see is this as a potential bear flag, just like this one. It's a really big retracement. There's no question about that. But that to me is very, very significant. And surely if that level goes, we're going to have another look. Surely there's no such thing. But in my opinion, if that level goes, we're having another look down here. We're really going to have another look at 66, 66 and a half, something like that. So there's 200 pips available to us here. That's what I'm saying. If we can get in here at the right level, well, we've had a break of the low. So we've got a new low. We've got lower highs, lower low now. We've just missed the weekly pivot, but we have broken the daily pivot. Today, I would definitely be looking for a retest of that level. So if the hourly chart will come up, I didn't click it, obviously. If the hourly chart will come up, well, you can see we've already had it. We did miss the weekly pivot. That's the only thing. So it would have been nice probably to get in around about here somewhere. So we may have missed the opportunity, but if this low goes and is retested, then I think there's still an opportunity to get back into Aussie dollar short. So that's a long way of saying I'm bearish the Aussie, Ash, I think.
Yeah.
A very long way of saying it. But the structure, the market structure.
It's interesting, isn't it? Because the Aussie, is it up today, the Aussie?
Not by the look of this, no.
Oh, interesting. Yeah, because the news, it rallied. Okay. Yeah, maybe rallied off the back of the situation in Libya, but now it's coming off again.
To a large degree, yes, it's rejected that big time. So, as I say, we may well have missed the opportunity. But, this to me is the key level anyway, this level here, this support level. If that goes, then I think there's, whoops, there goes the Aussie, bye-bye the Aussie. So on that basis, I still can't draw any relative strength conclusion between the pound and the Aussie. So I can't then go to the pound Aussie and say, well, okay, let's trade pound Aussie long, for instance. And similar applies with, I haven't really done an analysis on the Kiwi, but I would say this: in yesterday's free show, Paul was giving a very, very strong case for a strong Kiwi.
Wasn't he?
He's bullish the Kiwi.
Yeah.
So on that basis, I have actually placed an order short the Aussie as a break of this bar here. Now, I think that's very early. I do think that's very early, and I would much prefer to have seen a retest and a lower high here, perhaps on the weekly pivot. So if you go to the 4-hour chart, that's probably what I'm looking for. Sorry.
I was just saying about how useful it is. You're over in Australia, kind of with your finger on the pulse with what's going on there. You got Paul over in New Zealand. I'm in the UK. Gary's over in America. We got Justin kind of taking care of the the Asian markets. It's pretty useful, isn't it? Pretty useful team.
It is indeed. Last week, when I had a look at this chart, this is Aussie Kiwi, I was looking for a long. And the level I was looking for a long at was this level here. That seems to have gone by the wayside. And again, going back to what I was saying earlier, if I'm trading on Friday, I look at that bar and I think, oh, that's an interesting bar. Is that even tradable? Maybe. You'd probably be at break even right now if you traded that and you hadn't taken profit, because it did gap over the weekend. That's what's caused the rally, Ash. It's gapped and closed instantly. Interesting. Don't know why.
Yeah.
I don't know that there's a reason for that. And I'm not completely over this, because this structure is still telling me that we're in doubt here. There's still no clear. Okay, this is now an offset shoulder. There's no question about that. I'm not convinced by this chart that we are ready to crash. I think I'd really like to see this weekly pivot tested. So that's kind of where I'm at. I'd like to
Big
see
gap
a lower
down,
high.
huge gap down actually on that one. That must have been the Libya situation. The commodity currencies
Yeah, I guess
probably
so.
doing okay today. And I guess if you were looking at maybe something stronger, the CAD might be a decent shout with what's going on.
Aussie CAD, I haven't got that chart here, I don't think.
Not so much Aussie CAD. I would have thought CAD's probably CAD pound actually. Looks like a seems like a decent binary kind of option, if you like, of a currency which could potentially weaken and one which could potentially strengthen. If this situation in the Middle East continues, then you think that the CAD would be probably a beneficiary.
You would think that. I know oil gapped up this morning, and I don't know that that's maintained its strength. But anyway, we'll go there a bit later in need. But Aussie CAD could be the one, mate. I think that's probably not a silly thing to think from that perspective, and we are very much looking to break the bottom of that range at the moment. So maybe that is the way to go. There's definitely a bit of room available to us till we get to this level down here. Wouldn't like to be trading through that without taking profit, but that's like 80 pips away if you can find a way in here. Definitely worse cases, I would have thought. I don't tend to trade on a US holiday, but these are the things I'm going to be looking at tomorrow, mate. I think if the market does run away today, then so be it. But I'm more inclined to think that US holidays are sideways days, unless somebody can take advantage of the liquidity. I don't know.
Yeah, but completely agree.
I am an Aussie bear. Just like to see a few things happen before I committed myself entirely, and find the strength in a currency. I guess it is the dollar basically, but as you say, the CAD is very interesting as well if that situation does continue to escalate. So
yeah,
they're probably two good ideas: Aussie CAD short and maybe Aussie dollar short as well, maybe Aussie Kiwi short. So I think they're probably the three I'll be looking at tomorrow. Aussie yen is looking also interesting. Gee, if the Aussie rallies, I'm going to be out of things to do, I think. But it looks to me like there's going to be something available to us from a weak Aussie standpoint. So that's pretty much where I'm at.
Great. All right, buddy. Well, I mean, I haven't really got anything else. The FTSE 100 is just around about the buy zone, and it's not really putting in a decent enough reversal bar or pattern as yet. But I'm certainly, if I was not in this FTSE long, I'd certainly be keen to get in to the upside. As you say, maybe it's a day early because of the American holiday, and it might be kind of choppy today. It might be a difficult market, and I suppose we're just as likely to drift to the downside and not really go anywhere without doing anything hugely spectacular, and then start to pick up again tomorrow. So maybe a day to be a little bit more careful. But the FTSE is just under the daily pivot, and it's still an attractive proposition to take this one on board. I think anything from here with a 20 pip stop loss is still valid and still worth it. But yeah, aside from that, mate, I don't have anything else. Let's do it again tomorrow at 5 to 8, same time, same. Yeah.
All right, mate, just before we do go, pound hasn't been triggered yet. That's probably an indication that the market is illiquid at the moment.
Yes.
And also dolly, there was no opportunity really to get into the market for me last week. I placed the order underneath here. We're struggling.
I still fancy that, mate.
We're struggling to get higher. There's no question about that.
Yeah, I still fancy a bit of dollar yen weakness.
I had a look at the weekly chart, and it's exactly the same trade as this one last week. If it'll change to the weekly chart, ready, set. Doesn't want to change. Oh my God. Looks like I have an issue here. But the weekly chart is also a break. There we go. Goodness me. There. It's exactly the same trade as last week, if not a little bit clearer even. Well, I guess because we've come to the top of that channel. So I think there's value still in placing an order short underneath here, stop loss above the bar. And if this does break to the low side, you're still going to get plenty of value out of it. I know it's probably not everyone's cup of tea to trade a weekly bar, but it's only 87 pips.
Yeah.
And by the time you get to the bottom of the range even, you've got 106 pips in the bank. Even to the midpoint, there's 30 pips. So you've nearly got 0.5% before you get to anything that looks like support. And then you've got 1.5 to 1 when you get to here. But if you're fortunate enough to take this to the bottom, you've got what was the risk again? 85 pips. You've got probably 85, did I say? Yep. So you've got, 8 to 1. Sorry, 5 to 1.
Yeah.
By the time you get to there.
Yeah.
I don't think that's the silliest thing in the world to take.
No, I still like this. I still like this chart for some weakness. I mean, it wouldn't really be qualified with the DXY, looking fairly strong. And
yes, that's true. But if you look at the last goodness knows how long, it's a year, I think, or more, since we put in this, let's call it a reversal. When was that? That's like 5 years ago, 4.5 years ago, where dollar yen has been weak. Basically, it's been in a downtrend.
Yeah.
But if you look at similar currencies like the Aussie, like the euro, like the pound, over the same period of time, then it's quite the reverse.
Yes.
So the dollar's only been weak against the yen for some reason. I'm not sure what that is, to be fair. But technically it's there. It's there in front of your eyes.
Yeah. Interesting. Very, very interesting. But I like it as well, mate. I liked it last week. I liked the dollar yen for a short last week, and I looked at it over the weekend and thought, that hasn't really broken to the upside. I think the short is still a fairly decent prospect and an attractive possibility if
it starts to lose its appeal if we break through here. There's no doubt about that. And I'm on a monthly chart, for goodness sake. So, we're not going to be worrying about that too much this week. That's for sure. But the daily chart is showing every single sign to me that we can definitely come back here at least. And if that's the case, maybe look for a lower high even before you get in on that weekly chart, which to me is still worth consideration. I still think there's a case to be made for, if this is a false break, it'll be proven false there and it will go to here. So anyway.
Yeah. Well, the FTSE looks like it's going to close the first hour quite a bit below where I thought it would stop, but I still like the buy. I just think that it could still drift a little bit. It's just stuck on the weekly pivot currently, so you'd expect it to hold up there, but if it isn't to hold up there, then I think things start to look a little less attractive. It's just on an area that it broke from as well on the end of last week, towards the end of last week. So this is really the test zone, and we would want to see it pick up from this particular point. But if it doesn't, then I think we are probably on hold just for a little while with the FTSE. But it still looks pretty good to me. Still looks pretty good. I think a poor first hour, and maybe the Martin Luther King Day is going to possibly put pay to any real well, as you said, any liquidity out there in the market and any confidence, and maybe it's just not the day that people are going to be buying up. There could be a bit of profit taking going on, so might not be the best day to get the long, but still like the prices, and ultimately we do need to focus on that. So I still would advocate a long in the FTSE, and I still think there's plenty of room for it to go, but be careful because so far it has been fairly muted and a little negative. So let's come back tomorrow and see what it looks like, mate.
We will do, mate, as you say, at 5 to 8 UK time.
5 to 8 UK time, yeah. Don't be late. It's a date.
That's a date. G'day, Lewis. G'day, Rich. G'day, LT.
Bye,
sorry,
guys.
we haven't been talking to you guys, but we'll do it all tomorrow, as we say. Have a good one. And Ash, I've got 5 minutes if you have.
Great stuff. All right, me too.
Okay. See you guys. Have a good one.
See you in a bit.